Okay. ขอบคุณมากครับที่มาได้วันนี้ครับ Today we will be discussing the full year results for 2016 and the fourth quarter results. I have on my left Mr. DK Agarwal, who is the CEO of the Pet and Feedstock. And I have on the far left Mr. Vikash Jalan, who is in the strategy and the CEO's office and helps our IR today, for example. So I think we can start on time. And if you have any questions at the end, we can ask questions. Thank you very much.
Good morning, everyone. I'm here to take you through the consolidated financial results for 2016 and fourth quarter of 2016. As always, our analysis will focus on the core financials, which we believe that reflect a true reflection of the underlying performance of the company. That said, at the end of my part of the presentation, I'll cover how the core financials reconcile to the reported financials. As you are aware that we issued the audited financial results on Friday, and we hope that you have some time over the weekend and especially yesterday to go through the results. IVL has delivered on its promise across all the key indicators, and this has been achieved despite a very benign business environment. I believe it would be fair to attribute this outcome to three factors: our stated strategy of enhancing vertical integration wherever necessary, expanding in geographies that either offer the better margins or offer the growth in the volumes, and our investments into high value added businesses. The key to success of every great strategy lies in its execution. The new assets that we acquired in April in the USA and Spain have contributed meaningfully in volume, and also our installed capacity rose to 10.5 million tons, and production went up 24%. With a utilization rate of 86% last year. These assets also provided an additional revenue streams, with significant contribution to increase in EBITDA and core net profit in 2016, as you can see on this slide. Our return on equity have increased in 2016 to 12.4%, and from 8.3% in 2015. And our return on capital employed stands now at 10.4% against 9.2% last year. The highest contributor to the incremental EBITDA this year have been our feedstock segment, which delivered an EBITDA growth of 42% year on year. A large scale and more integrated portfolio in an advantaged geography, along with the high value added chemical feedstock, led to this growth. And this improvement were achieved despite a lower production that we saw about 4 months of planned shutdown and then extended shutdown. So there was about 1.5 months of plan and then extended. So we lost some volume in our EOEG facility in the US, and so feedstock segment did not capture the full potential, and as you will see improving in 2017. EBITDA is up in every geography, not only in every segment, and contributed about 25% growth year on year, with a growth of, let's say, 27.4 billion baht. In North America, we achieved 12.4 billion on a 3 million ton volumes, whereas in Europe, Middle East and Africa, as you know that we are present in Africa as well, EBITDA stands at 6.6 billion on a 2.45 million ton of production. In Asia, we generated 8.3 billion baht of EBITDA on a 3.2 million ton of production. So our volumes are more or less like 1/3 in North America, 1/3 in Europe, Middle East and Africa, and 1/3 in Asia. On a more conservative note, we impaired one of our smaller 2 plants in Turkey, and due to prevailing local market conditions, and we took the impairment in the second quarter of 2016, as you know. Over the year, the net profit increased 57% to 9.7 billion baht, and the board declared a dividend of 66 satang per share out of the profits of 2016, which is an increase of 38% over 2015. Going to next slide, this slide gives a reconciliation that how the EBITDA has grown in 16 over 15. As I said that it has grown 25% year on year. In the PET segment, it grew 19%, mainly on the back of increased volumes, which grew by 11% on a year-on-year basis. This increase came from the acquisition of Micropet in India. As you know that we entered for the first time our maiden entry in end of 2015. And 2016 was the first year where you saw the earnings contribution from Micropet, which is our maiden entry in India. The full year volumes from Bangkok Polyester that we bought in Thailand in 2015. It was bought in May 2015, and 2016 was the first year when you saw the full year contribution. And 9 months of acquisition of Spanish assets. We bought a PT assets in Spain. And as you know that towards the end of the year, we deconsolidated Micropet, and because we consolidated our position in India, so with Dhansevi. So we formed a 50-50 joint venture. So we deconsolidated Micropet and bought another JV, form a JV with Dhansevi. And now we are the second largest PT company in India. The company's fiber business benefited from the full year earning impact of our performance fiber business that we bought a very high value added business in China in 2015. And then a higher operating rate at our Indonesian plant. As you know that few years back we started CP4 as a necessities fiber in Indonesia. So that has been ramping up since then, and we saw a higher contribution in the volumes from that business. The two new acquisitions of Aromatic Decatur in the US and Inorama Ventures in the Spain, as I said previously, delivered an EBITDA margin of 18.6% due to larger scale integrated assets in a disciplined geography and higher contribution from high added chemicals like NDC and IPA. We'll talk more about it as we move forward into the business section. The portfolio would have been performed better have we not faced the unforeseen production issues in our EOEG facility in the US, as I mentioned. Expansion in the Asian PTA EBITDA per ton is hopefully an indicator of gradual improvement in margin with demand supply rebalance in Asia. But mostly it is not, there's a lot of operational excellence which has also gone into it, and the full potential of PTA EBITDA increase margin is yet to be seen. On the next slide, you will see that it's important to understand that existing businesses, excluding the two acquisitions made in 2016, delivered a superior performance in 2016. So this tells you more like a same store concept. Like we had businesses in 2015, how they have performed in 2016, excluding the 9 months operation of Decatur Aromatics and IVL Spain. So this reflects, today we have high value added products in all the business segments and in all the three geographies. High value added business contributed 20% of volume and 48% of EBITDA in year 2016. We have been able to deliver higher absolute EBITDA despite weakness in Asian necessity as well as the EG business, because EOG business saw the lower volumes, and also the margins have been weak and started to improve since November, December last year. On the next slide, this talks about fourth quarter specific performance. During the fourth quarter, the company delivered an EBITDA of 7.3 billion baht, which represents an increase of 43% as compared to last year same quarter. Operating rate for the quarter increased 86% against 82% in the same period last year. The second successful quarterly performance of the acquisition led to a 73% increase in profit and 89% boost to our earning per share when compared to the same period last year. Our return on capital employed rebounded to 10.3% against 6.6% last year same quarter. A slight lower EBITDA per ton during the quarter is due to a lag impact, because as you know that towards the end of the year we saw the rising prices. So raw material prices have gone up, and the end product prices, there's a lag. And as the prices stabilize and starts declining, if they can, so this lag impact will unwind, and you will see the rising margin. So it's just a timing issue. As I said that towards the end, I'll show you that how the core performance reconciled to the net profit. We assess our performance on the core basis because it reflects the underlying business performance. That said, this table provides you the reconciliation. I'll just go through the last two columns on the right to point out the 2016 full year reconciliations. With the rise in crude oil prices in 2016, the company had an inventory gain of 261 billion baht, when compared to inventory loss of 2.5 billion baht last year. Adjusted after tax net profit before extraordinary items was 9.9 billion baht in last year compared to 4.2 billion baht the year before. Talking about inventory, in order to provide better analysis, we have revised our methodology to calculate the inventory gains and losses. We always try to improve that. How do we analyze our performance and how do we reflect the core performance? So there has been some changes in the methodology and for calculating the core performance, and all the historicals have been restated accordingly. But there are no changes in the reported financials of the company. Next, we add the non-operational items and extraordinary income. The non-operational items and extraordinary income include gain on bargain purchase. As you know that we completed 2 big acquisitions in 2016, and there was a negative goodwill or gain on bargain purchase of 6 billion baht based on an independent valuation of the new acquisitions that we completed last year. Acquisition cost and pre-operative expenses included 186 million baht of expenses. Other extraordinary income of 504 million baht, which is mainly from the recovery of Abu Dhabi project expenses that were written off the year before. And this gives the 2016 reported net profit of 16.2 billion baht as compared to 6.6 billion baht in 2015. Going on to the last slide on my part, there are 3 key messages for me in this slide. Firstly, the company has been consistent in its performance and its growth is aimed at achieving one of the stated goals of doubling the company every 5 years. The graph here is a testimony of this achievement. Secondly, as you can see from the 2016 numbers, the pace of performance has accelerated sharply following the 2 recent acquisitions in 2016. These 2 acquisitions have been on board just for 9 months, and the full year impact you will see this year. Last but not the least, the rate of the growth in EBITDA has outpaced the growth in production, clearly indicating the positive impact of geographical expansions in the right markets, higher vertical integration and the inclusion of high value added products. Before I complete my part of the presentation, let me mention a couple of other key matrices. Our cash flow and financial position. First, the cash flow from operations have been strong, and along with the perpetual bond proceeds, enabled us to grow the company and do a capex of approximately 47 billion baht without increasing debt over the years 2013 over to 2015. 2016 operational cash flow have been equally strong at 25 billion baht in line with EBITDA and helped fund significant portion of our growth capex of 36 billion baht last year, resulting in a net debt to equity ratio of 1.06 times at the end of 2016 against 0.96 times at the end of 2015. The total outstanding debt has an interest rate which is fixed 50%. At the end of 2016. We expect operating cash flow to remain strong, which will drive down the leverage further and provide sufficient headroom for any growth opportunities or to further lever down the debt. With this, I request Mr. Agarwal to take us forward.
Very good morning. So I'll first cover the strategy part. What is IVL? The transformation has not been linear, it has been exponential. Today, if you see, we employ 14,600 employees around the world in 21 countries, 11 R&D centers, 10.5 million ton capacity. So it's a huge built up from 2007 to 2016. This company was only a PET company earlier. Today, it's a fully integrated, having a large geographical footprint, and you can see the customer base which we have. This company only had EBITDA of 100 million. Today we are at $775 million EBITDA for 2016. And today we have emerged as a largest integrated petrochemical company. The risk appetite, as you can see, we are diversified geographically, we are diversified product-wise, and we have a complete grown the pie significantly globally. And there is a good footprint created for further growth of the company. We continue to seek and create more for our clients. So there's a lot of partnership projects which are done with the clients, like Procter & Gamble or Kimberly-Clark or 3M in the world. So there is a lot of partnership project in innovation, and an innovation platform has been created. Of course, intention is that we seek to create more wealth for our investors as you see our performance of the stock. And we remain very focused towards our aspiration of becoming a world-class chemical company that makes great products for the society. I mean, if you see our new vision statement, so there's a lot to come for IVL going forward. So this shows that how consistently we have performed 7 consecutive years of core EPS growth from 2012 to 18, what we had placed earlier in the Capital Day. So our drive growth is in our DNA. It's a growth stock. It's not a static stock. Growth has relevance when you quote sustainable value, and we remain steadfast in our drive towards achieving that objective, and we continue to drive towards it. The steps that we have taken by diversifying the product base have gone long way, and upstream integration to achieve our targets. In early 2015, our CEO had shared our plans, what we'll achieve by 2018, and I think we are proud to say that we are on way of achieving these targets globally. Although, you know, the difficult market conditions has been there for last 5 years for the polyester chain. This has happened because we have executed in our strategy and will continue to do so going forward. Because acquisitions are easy, but how you integrate them well into your organization. You have 68 sites globally operating from so many different nationalities, and that has been the success story of IVL. Well, 2020 targets are very ambitious. We have a headroom of $5 billion, but we feel confident that the people which we have, many people we acquired, you know, who came with us in the acquisition, and the product portfolio which we have, we are very excited that the future is exciting in 2020. Well, in a manner of speaking, Indorama Venture has been a trendsetter. As you can see here, the margins, this shows a margin chain in PET, fibers, PTA, MEG, and you can see how our return on capital employed has significantly improved to 10.4%. 2011 was the peak of the earning, as you can see, but then since then the margins have remained in compress. So what we have delivered, the results today are based on compressed margin. So in 2011 we benefited, but we suffered from lower margins, particularly in PT Asia, but also the MEG as in 2016. We had the foresight that as the margins are coming down, to invest selectively, growing our geographic footprint, in selectively enhancing our integration and creating a diverse earning. So today, IVL's earning base is very diversified. It has high value added product line. It has a geographic diversification. United States contribute 1/3 of the earning, but much more EBITDA. So all this diversification has helped into sustainability of the earning. And when you capture more value chain, the volatility of the earning goes down. The journey has begun, and we will like to continue down this journey of value creation as we move forward. Not only will be the bigger than where we are over the next 4 years, but we also intend to enhance our returns significantly over this period. Company has many opportunities in the light fields. In the portfolio which we have an opportunity to expand different product portfolios also. All of this, as has been practiced in the past, will become of a series of well-thought actions and initiatives that we are all committed to. So this margin chart shows you how the margins have moved and where we are and how our return on capital employed has improved by a better strategy in place. So not very long ago, we were only the Asian PET producer. Today we are a global PET producer with 18% market share in the world. And we are very well integrated in Rotterdam expansions. When it starts, will be fully PTA integrated. In US, we are from xylene to PET, and once our cracker starts, it will be from ethane to PET. So our strategic expansion approach rests on the philosophy that different markets have differently, and we need to be organized of that reality. Cheap gas is the future, and that's why our cracker is, we are very excited as it starts in the 2017. In EMEA, industry consolidation is still not done. We just recently heard that one of the plants in South Europe may shut down. It still is a deficit market. And there is a high growth in Asia. So you are riding on all the three legs of the world, United States, Europe and Asia. So we have created significant value and will continue to do so as we expand differently in differentiated markets, thereby benefiting from these unique positions. We started this journey with a handful of revenue stream. Today we have around 15 revenue stream. As you can see on the right-hand chart, 775 million contributed by different segments of the business. It's a very diversified earning base. These assets were aimed at mainly at enhancing value addition and hedging the value chain by increasing feedstock integration. As you can see, you capture more value chain, the volatility reduces. We believe these businesses bring us even closer to our customer as we can provide them global solution with our enhanced ability and overall a superior and reliable supply chain to the industry. We acquired 2 new products in the recent acquisition. In Spain, IPA, we are the only producer in Europe, and NDC in United States, which I will cover, which is we are the only global producer. So what we are trying to say here that there is a huge product base, geographical, that the earning streams are diversified. So you're not exposed to one particular earning stream, having 22 earning streams. So if you can see, our EBITDA for 2016 has been $775 million. You can see a breakup between PET contributing 296, fibers 205, feedstock has been the big driver as Vikas explained, 271 to 775. And you can see the North America contributing 348 million, which is nearly 50% or 46%. And EMEA, and you can see the Asia. It gives you some indication how the 2020 will look like with all the committed projects which we have, which we are spending $1 billion, which are already approved projects. So our unique global position in the PET business places us in an advantageous position as we are able to provide solutions globally. Given its global scale, the company is well positioned to benefit as and when headwind turns into tailwinds. Headwind turns into tailwind means basically, margins were not great. So we think that now the margins in chain will improve and will convert into tailwinds. What is happening in the industry? Fewer announcements of capacity expansion because they were not yielding returns. An expectation of high interest rate environment, as you can see from the recent Trump elections, and you can see the interest rates moving up. China has been very cautious in lending, are expected to play a role in consolidation of the industry. So we'll see consolidation of the industry, which helps in margin improvement and stands to benefit the result for IVL. So IVL has passed through a very compressed margin. We believe that margins will start improving as the chain becomes tighter. Having said that, in the commodity section or the necessity section, we are also expanding our HVA portfolio. As you've seen, we recently did the inauguration of Kaiping, the another line of performance fiber, the Thiaccord. So we continue to look at different options, and by investing further in terms of our capabilities and capacities in ongoing endeavor to offer unique solution. So it's a dual strategy, integration and product portfolio, and then you have the HVA base. Well, this shows you graph how the today 2016 our EBITDA is 775. We have 0.88 as a debt equity, and based on the new projects which are already approved to the extent of $1 billion by 2020. Our EBITDA, we can't give you the numbers, but it can give you an indication that where will be, which will be contributed by cost, volume, mix, and the new projects, particularly the Rotterdam expansion, cracker, the new Thiaccord plant, and the margins, slight improvement in the margins, which turn into an EBITDA of X in 2020, and the debt equity will become 0.4 net debt to equity. Now, based on net debt to equity of 1, we have a headroom of $5 billion. Now this can, there will be many opportunities, so we will continue to look at those opportunities, but not just, which doesn't make sense to our chain margins. So we will continue to look at those which has a synergy with our businesses, where we can have a integration, we can have a product diversification, and this will allow us to further grow this company and take to the new lips. So this, I think, gives you how the IVL future will look like. And we have demonstrated and performed historically. Well, IVL is a very proud Thai company with presence in 21 countries and having 67 sites. You can see the map here, every part in the world, except in South America. So we are unmatched in our reach. And that's why it gives us a unique position to serve our customers globally. And we have a huge innovative platform we are already offering. And the African continent, we have presence in Nigeria and Ghana. You can see those small dots there. There's a lot, this is a virgin market. There is still a lot of opportunities to grow. So these are something which we will continue to look at it, that where there are opportunities to further acquire or further build or further diversify the product portfolio. So we have created a huge global footprint and a management bandwidth. The world is changing. While we have spoken at length on the steps we are taking to grow our bottom line, I think it's very important that our future generation, we are a responsible member of the communities in which we operate. And you can see our percentile rank versus DJSI world chemical companies here. The need for creating a sustainable footprint cannot be understated. So IVL, we have put in place policies and systems that are best in class. We are enlarging our recycling footprint. We have been recognized by several external agencies. The steps we have taken to share our policies and improve our disclosures have resulted in the recognition by Transparency International. We won this award of Transparency International. So it's not only about growth and money, it's also being a responsible company. As it is visible from our percentile ranking, we are clearly taking the right steps as far as DJSI is concerned. We are committed to this as it helps us to continue along the journey of creating a sustainable organization. We have to be careful that we treat our surroundings and stakeholders. How do we treat them? We have invested in integrated recycling. We are the largest recycler in Europe. We have in Mexico, we have in US, we have in Thailand, and this will continue to grow. So there is a strong commitment towards sustainability. So our vision is very clear: to be a world-class chemical company making great products for the society. We have very strong values. As you can see, our values, what we cherish, something that defines who we are and something we don't negotiate on. Because it's very important to have demonstrated values and percolated right down the management everywhere in the world, every employee. Our mission is to be a responsible leader, and I'm happy to state that we are responsible in what we do and we are a leader in what we do. So that's a strategy which we wanted to share in terms of growth, in terms of how the industries and what actions IVL is taking. So it gives you a little bit of flavor of what IVL has in stock going forward. Let's talk a little bit about our industry now, how the business environment is. The business environment, as I just mentioned, the slowdown of the capacity is there. You know, differently earlier we were continue to report on our segments as before. Now we are sharing the thoughts on the basis of an integrated polyester business model. So as we said, that margin trend is improving because entire chain was compressed. PET margins, if you look at the PTA margins in Asia, MEG in 2016, even paraxylene margins are compressed. They are only made money who are very well integrated refinery. So once this margin improvement happens because of the slowdown in the investment, we will be the beneficiary. We have a true global footprint, and since we are able to provide a unique value proposition, we have a naturally hedged position. The second thing which is going to happen is if dollar becomes stronger, our business is dollar driven. We are a dollar business, our spreads are dollar. So if the currencies are weaker around the world, like Mexican peso is 20.5, Indonesian rupiah has weakened, Turkish lira has become 3.6, our cost base reduces. So once cost base reduces, it translates into a better EBITDA. So exchange rates in growth-oriented emerging markets are expected to remain benign, thereby helping to maintain cost advantage position which we have. How does the crude price changes? If the crude price goes up, we have been suffering from low freight cost. If you are tracking shipping industry, and recently a company became bankrupt, Hanjin in Korea, the shipping freights were very low last year. So when the freights are low, in the Western worlds, we sell based on import parity from Asia, because there we sell domestically. So as the freights goes up, and as some Asian PTA margin improves, the import parity which will improve in European, and which will have a impact on the margins, which will improve the margins in those regions. So in any change in crude oil environment, and high freight rates will make the business environment more conducive for domestic operators. So industry capacity utilization will improve, exchange rate, dollar remains strong, euro remains weaker, crude oil grows up, higher freight rate improve. They're all positive for us, except that our working capital may increase if the prices goes up. So that's the only negative. Otherwise, our overall, we are able to pass on any increases. We have seen $100 a barrel, $150 a barrel, and we have seen $40 a barrel. This graph shows you how the historically 5 years, the polyester capacity utilization. So you can see that in next 5 years, only 13.3 million ton of polyester capacity is getting built in the world, because it's not remunerative to build, and demand growth will be 17.7, so there is a deficit of 4.4. In PTA, since the margins in Asia has been bad, 6 million ton will get built versus a demand growth of 15, which pushes the utilization rate from 78 to 84%. So next 5 years scenario is different than what last 5 years scenario is in terms of capacity utilization, which translates in terms of margins. And I said value chain has been compressed, so we think they will revive in the chain. And looking at our footprint, we are well positioned to have this benefit of tailwinds when demand outpaces the supply. And this slowdown is very clear. The Chinese lending has restricted. Today we don't have many new PTA plants getting built. As you can see, there are only 6 million ton. And it is important to understand that if Asian PTA margins improve, it will basically translate into the end product. This means import parity in Europe goes up. So the entire value chain gets impacted. So in Europe, you will have expensive imports coming because of higher PTA margins, higher freights. This means it will have better margins in Europe. So this is the industry trend which is going to change. Now if you look at let's look at North America. What is North America happening, which is our big market? The demand is continued to grow. As you know, the Trump is driven towards having higher growth. This means if higher is the growth in the United States, we will have better demand coming up. He's also looking at protectionism. This means more duties on NAFTA or in China. This will help us because we have 75% of our production is in United States. So Mexico exports large quantity of PET to US, and if that happens, then your US operating rates goes up. This means it will have more margins. We are most integrated from ethane to PET and xylene to PET. So we will have the benefit of that in the United States. We are very excited about this cracker which will start. And already, as you know, the industry is well consolidated. 3 players control 90% of the PET market in the US, and certainly this benefits in the pricing and the margin. We are committed on recycling, on the sustainability. We are continuing to expand our footprint. We have a plant in Mexico, in Auriga, in Alphabet to improve the sustainability. So it's an integrated part of our business, recycling. So North America is very exciting. Lower energy environment, better margins, disciplined industry will all help and continue to have better results in North America. This is a new product which we took from acquisition of BP in April, NDC. We are the only producer in the world. While this product has been there you can see some applications on the right hand side, has been there with BP, but BP never capitalized on this because they did not have any other polymer business. So we have unique opportunity to develop copolymers, means blending PET with NDC, like PET, PETN, and we have a good R&D facilities in US, and this will help to accelerate that how we can commercialize this. So we are excited about this new product, NDC, which healthily, and which is a very high value added product actually. And it will also, we are also working in partnership with some key customers, that how we develop new applications so this can grow. So having being the only producer in the world, you can capitalize further on this very high value added product globally. This is a project which we are very excited. This is the cracker which is getting built. It doesn't change our strategy if the crude oil are low or high. Actually higher is benefit because the difference between the gas price and the crude oil prices widens. This project is on budget, is in time, and expected to be operational by end of 2017, this year. And it will be well ahead of many other projects which are actually getting built, but they are all new crackers. The overall construction is 70% complete. All the contracts for ethane and propane has been secured. The environmental permits, which is very important thing, has been received, and we have 650,000 hours of construction hours without a lost time accident. So it has been a great project. Let us understand that this cost of this project is only 50% of the replacement cost. So the cost of this project will turn out to be $1,000 or $1,100 per ton versus a new build of $2,500 per ton. This means that you have a huge capital advantage for this project, and the gases continue to be cheap in the United States. So when connected with our glycol, because we presently buy ethylene, this will basically supply ethylene to our own glycol plant. We will be able to get the full value chain and full financial benefit of this project in 18. And this will, so this is I think the first move by a Thai company in the shale gas field in USA, and this, it was a shutdown plant which we restarted. This graph shows you the margins of the, we said that 2016 the glycol margins were not good. So as you can see, the dark blue shows what is the US olefin standalone margins, and then you have the EOEG standalone and the Asian ethylene margins. So you can see that the United States margins are much higher than Asian ethylene. And if you can see first quarter of 17, you can see there is a further improvement. So gas in United States, shale gas has much more advantage, and that's why more crackers are getting built versus naphtha cracker. And if the crude oil goes up, this further diverges. So if crude oil improves by $60, then we'll have much more earning coming out of this. As I said, 2016 MEG margins were not good. They started recovering only in November, and this quarter we already will have the full quarter benefit, and we think that 17 the margins will remain reasonably good. And as the crude oil prices further move up, it will drive the naphtha prices. This means the MEG prices will go up and will benefit our US cracker integrated olefin plants. Just to give you a number, that US cash cost of ethylene is only $350 per ton versus $800. So you know that many petrochemical companies in Thailand also are making very good money because of the ethylene tightness, particularly polyethylene and all that. And the world demand of polyethylene is likely to continue to remain strong. So the margins will remain strong, and US will actually much more benefit from this because of the lower feedstock. Let's go to a different territory now, Europe. Actually, growth in Europe has been much better, nearly 3% because of substitution from other polymers, and demand of the virgin has been high. The margins were compressed because of lower freight rates. So higher freight rates and lower euro will actually help the domestic margin in Europe. Europe is still a deficit market, imports about 600,000 tons of PET. And I just mentioned that we are hearing a rumor that one of the plants in South Europe may shut down, so which will further create a deficit. Anti-dumping duties are being initiated for PTA in Korea against Korean PTA, which is coming into Europe, which will help our PTA margin. And we are the only integrated player in Europe from PX to PET. And as a result, we will benefit if there is any dumping duties come in. You are aware that Rotterdam is expanding the PTA capacity by 350,000 tons, which will replace our purchased PTA, which is just captive, and this will significantly add the EBITDA. We expect an EBITDA of nearly 35 million euros from this expansion as this comes in. So this will have benefit in 17.5, and in 18 we will have full benefit. Our packaging business in Africa is still an exciting thing, although it's a small operation in Ghana and Nigeria, but adds to a good bottom line. The other product which in feedstock we had a high value added is IPA. We acquired this Spanish asset. Today, just to give you a feel, 50% of the IPA goes into PET. So our own captive consumption is about 90,000 tons. And then it goes into high value added applications like paints and coating industries and polyester resins, as you can see on the right hand side. By acquiring these assets, we became the only producer of IPA in Europe. And we plan to double the capacity in 2018. So the production of this IPA will increase by double in 2018. The key thing in this is the tie-up of the raw material, which is the metaxylene, and which we have already tied up for this expansion and actually further growth in 2019. So this is a one product category where we are second largest in the world today, and we can dream that we will put a number one position in the IPA business. So this is something which will continue to grow, and it's a high value added. It also gives you a feel of what is the diversified earning base which we have. Let's move to Asia. Asia is not performing to that region, as you can see, because of very poor PTA Asia margin. But as we showed you that EBITDA per ton marginally improved, and this improved because of operation excellence effort. Well, the overall PTA margin still remains very low. So whatever you saw the improvement is because of operational excellence measure. Now as you saw that addition, high operating rate, and there will be less addition in the capacity, which will help to improve the PTA margins. You know, suddenly the margins improve. They don't improve in $5, $10. As you can see in MEGs, it just improved significantly number. PET in this part of the world, Asia, continue to grow very rapidly because of the bottled water and consumption of bottled water in Thailand itself. You have seen Pepsi, Samsung, how rapidly it has grown. Today Thailand is 350,000 tons market. We went into India with our acquisition of Micropad, then we created a joint venture. Today we are second largest in India after Reliance, and this is a country which will rapidly grow. If you compare per capita consumption in India is only 0.6 kilo versus in China 4 kilos. So there's a long way to go. And we also have a good packaging business here in Myanmar, in Philippines, which adds to the bottom line. And then you have the, as you know, the fiber, commodity fiber businesses. So Asia, we have an integrated platform. We are very excited about the Asian business. And PTA margin should start. Now this summarizes the total PET and feedstock. We achieved a $557 million EBITDA versus 444 in PET and feedstock. This contributes 75% of the IVL, and with the expansion plans which already under construction, we expect it to remain 75% of the IVL. Which are the major drivers? You have US gas cracker which is coming in. As I said, that adds up $130 to $140 million. We have Rotterdam expansion coming in, and we have many debottlenecking of the assets which are coming in PET. Even in Rayong, we are debottlenecking the assets. Also in China. In 2006, we suffered, as Vikas explained, that because of the shutdown of the MEG facility and the weaker MEG margin. In 2017, we'll have the full benefit coming of Rotterdam expansion and the better contribution from MEG assets, as well as both in terms of higher volume and improved margin. And in 18, we'll have impact of Rotterdam expansion full year, and also in 17, as you know, 16 we only had 9 months operation of acquisition of Decatur and Spain. 17 will have full 12 months, and 18 will also have the IPA. So this you can make the bridge how these are all committed projects. So that is the feedstock. Let me cover briefly the fiber side. You know, in fiber we are in commodities, we are in specialty, and HVA business is a very, very key thing. The world is changing. As you can see that globalization has gone into offshore and scale up at the cost of flexibility, the new trends and the new way of pattern of buying of millennials. So what will be the key drivers? You know, people thought that if you go to China, China will be the clothier of the world. That is exactly not, because as you can see, the technical textiles have significantly developed in the Europe and America. So even whatever acquisitions we did in Europe and US have significantly contributed to the bottom line. So the performance will be important, sustainability will be important, and technology will be, and the fashion is changing. So as you can see that, you know, it's not that the China is the cheapest. What is important is how close you are to the customer, like Zara's business model, where they have in Spain, you know, so that you don't never see Zara fabric being sold by a ordinary shop. They only have their own outlet. So they exactly monitor what inventories you have, which is getting picked up quickly, and then they immediately, so the speed is very important. Similarly, in Adidas in Germany, so we will see that innovation will be the critical thing and sustainability will be the critical thing. And that's exactly what we are moving forward. So what you need is good performance, lightweighting, disposable, and all our innovation platform will help in this growth areas to bridge this gap. This shows you some vitality index. We have 80 R&D resources, 8 R&D centers. We are basically, there's a lot of new product pipelines. The vitality index means what products are getting developed over 5 years, and 20% of our business is protected by patents and proprietaries. So you can't just get approvals. Like a tire cord, it takes 2 years to get an approval from a tire company. So 25% of our turnover came from the products developed in 5 years. So the HVA EBITDA, you can see how it is continuously improving and what are the new products which are in the pipeline. So it's more about innovation in the fiber business rather than. Then we take off levers of fiber business. Of course, we have to make sure that we are partnered with our big brands like Procter & Gamble, Kimberly-Clark, all these global companies. We move to the places where they need the product, enhance our sources of competitive advantage, and through innovation we create new products and shape organization for the future business needs. So this has been a continuous drive by IVL, leveraging on these acquisitions in fiber regions or any other product, and which I will explain you that how the things change rapidly. Just let's see. So, you know, as you can see in this graph, how the word demography will change. As you can see that demand older people is new emerging market with over 3 billion more middle class people. So you have population increasing, middle class people increasing, and their spending pattern changes, and that spending people pattern creates demand for the product. So let's see what it can, just to give you some example. Today, like when you have the lower earning below 1500, your major expenditure is in fem care. You don't go to the baby diapers, but once your standard of living improves, you add up baby diapers. I mean, I'm talking with not with reference to Thailand, but with reference to the worldwide tendency. And then you have elderly people, lifespan is increasing, so you have incontinence products coming in. So the wipes, incontinence products. So this is the product profile which IVL offers and will be able to actually give a lot from our product portfolio. I have to rush because the time is running out. In automobiles also we provide solutions in upholstery, seat belts or composites, lightweighting. Electrical vehicles is not going to change because people are going to sit in it. So still only it will become lighter. So more innovation will come with electrical vehicles, and there are a lot of opportunities in the fiber segment in our HVA business. This is our growth approach that target increased share in the high growth segments. As you can see, this is a matrix of market attractiveness versus the relative market share. So we will continue to identify and participate in the attractive market segments in the fiber sphere. Well, we are also in commodity, don't get it wrong. In Indonesia, we have the most cost competitive plant. But if you see that we are very well insulated from the commodity competition also because we produce at a right cost structure, and 62% of our products are protected as their HVA business. And nearly 20% are sold in domestic consumption because it's a domestic market which is protected and where we have better customer proximity. We have a unique positions, largest in bicomponent fibers, largest in airbag yarns, recycled fibers. We are the largest in polypropylene. PLA, we are 95% market share. So these are small businesses, but adds up to the bottom line, as then you can see how the EBITDA of fiber businesses. So today, IBA, the fiber business contributes $205 million. We have an expansion coming in the Bico line. We have a tire cord expansion coming in. As you can see, the North America contributed 56 and $102 million was contributed in Asia. So you can see an improvement in Asia. And with the committed projects, they will continue to have 25% of the IVL. So you saw the feedstock and PET, and now you saw the fiber, which are the two major segments of the business which we have. And on the right hand side, you can see the automotive, how the business segments contribute to it. So now I think let Richard take.
Yeah, I won't. I'll just sum up a little bit quickly, and then we'll ask some questions, receive some questions. So you can see from this is just a summary, and you can see that the strategy is very important, and you probably all know it very well by now. We'll have to evolve continuously and become what we believe to be a truly world-class organization. You've seen that the recent acquisitions position us such that we have the ability to create something unique to IVL, and this is a journey that everyone's excited about. I can't emphasize enough that we need just to be global leaders and lead the way in developing and delivering these sustainable solutions that not only help strengthen the company, but also give back to society. So we'll be following these major points as we go through. And the summary that you should take away today is really that last year you saw the earnings growth in every segment. In a tough business environment, we still grew. From 2017 to 20, we foresee an improvement in industry fundamentals, and IVL is committed to some value-enhancing projects. Going forward, building a world-class organization with sustainability will be our main competitive advantage. And in case people were wondering whether we're going to grow further in the future, then we can say that we have a headroom of about $5 billion to fund growth opportunities and improve our financial ratios going forward. So, at the end of that, we have 5 minutes. Any questions from the audience? If not, you can ask us outside the room, but yes, go ahead.
Recently, PTTCG has proposed to get the petrochemical units from energy units to the PTT group and consolidate under the PTTCG.
That's right, yeah.
How you will compete? Any of the segment of the business is
Not similar.
Raw material or finished goods?
Well, that's just a reorganization by PTT of their petrochemical units. We are not in the sphere of any of those product portfolios. We are a customer of PTTGC in terms of paraxylene and MEG. So it doesn't change any of our competitive landscape. PTTGC is looking at building one cracker in the United States. It's still at final investment decision, as I think yesterday I read, is going to be in 2017. And so it doesn't affect us at all.
I'm having one question regarding your current portion of LT. You are having perpetual bond already goodness inbuilt, and you are revolving long-term debt. If you can introduce more to 100%, so the total long-term loan can be used by your company because cost of borrowing is lesser than percentage of margin, gross profit margin, and EBITDA margin, and net profit margin high. The core competency and core capability are very high. So instead of repaying the loan, keep it within the company. Thank you.
All right, thank you.
So any other questions from the audience? Yeah? So if there aren't any questions, we can allow the next company to come in, but if you have something to ask outside the room, please feel free. Okay, thank you very much and goodbye.
Thank you.